Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are after market close on Monday, November 1st. We're going to take a look at SoFi. I feel like I should have an air horn here or something. I mean, just a remarkable day for SoFi. Just pushed and pushed and pushed, and it was tremendous. So we're going to go over the day, and then we're going to go over the year-to-date chart, and then check in on some data. Before we get started, though, if you caught last Friday's video, I wanted to correct something that was in that video. So I was looking at a tweet at that point that said that the bank charter was set to be announced today. That tweet, I think, has since been deleted, and there's a lot of speculation that that was an article that was just written by somebody talking about why they invested in SoFi, and that the headline was actually edited. I don't know who gets off on doing that sort of thing, but I shared it because it came my way, and I never know how much publicity these things get. So if folks are running into it, I wanted to sort of give my 2 cents. And, I think there's often a lot of back and forth around like, don't spread rumors, but the flip side of that is if I don't say anything about it and folks are seeing it all over the place, I get a ton of messages about it. So I'd rather just address it in a video. And, I had said it that in the video, I said, I don't know how this person would have any insight into them announcing it on Monday, November 1st, but, take it for what you will, but I obviously didn't put much credence into it, so I didn't feel like I was spreading a rumor. But the big correction besides that point that I wanted to make is I had then looked at 2 or 3 articles that were pointing to conditional approval for SoFi Bank, and it just happened to be on the day or the day after the 1-year anniversary of those articles coming out, and so I mistakenly read those as though they were present day, but they were actually a year old. And so if you didn't get my correction on YouTube or on Twitter or the pinned comment in the video, just note that is my correction. And I also went through and edited that part out of the video because I didn't want it to confuse people who were maybe going to watch it after I realized the error. So, all right, let's get into today. So today, really, really textbook move, right? Came up, bounced off the VWAP, came up, bounced off of the 2132 zone. I'm living in the past, clearly. The 1993 zone is what I was thinking of. Came up, was working to grab the support at the 2187. So these levels just held up really, really well, right? The 2132, 2187, both used to confirm and to bounce support. And then I actually took an additional call option today. I can't recall, but anyway, it's a call option that expires November 12th. I'll mention it in the next video, or I'll pin the comments of what the strike price is. It doesn't matter, but I try to be just freely transparent with those things when I take or exit positions. But anyway, I was following this uptrend up, and that's when I decided to, look into taking an option today. And obviously the 12th is meant to have the interplay of earnings coming out before then, so a whole bunch of factors coming in. But anyway, 22.89, so we fell just 8 cents short of that. So these supply and demand zones holding up really, really well, in my opinion. And I have gotten a lot of flack over the last few weeks about, the run's not going to sustain itself without some major catalyst coming in. They have to announce the bank charter, or, something else has to drop in order for a big move up. This was just a technical move as far as I'm concerned. As far as I can tell, this was a technical move, and this was a combo of what we've been looking at in the daily, plus I shared last week a couple of folks who had charts of a clear cup and handle that had formed on SoFi, and I think that it's just those things taking shape and then playing out. So in any case, I was tweeting a bit today, but not a ton. This trend line was holding, and then it jumped out of here, so that was a nice move up, and it came down and had to retest it, unfortunately, and that's what this sort of like intermediary was. But I'm going to get rid of all these because I don't want them to clutter the daily chart. But this was the sort of breakout point that I was looking at, and it's still kind of struggling with that. This is just intraday. This isn't on the daily, so I'm going to get rid of this because the day is over. But this was, where it was topping out here, in which, pressed it down to test this trend line, compressed, really tried to make a move and then had to make another move, and then it grabbed support, but then it flipped it again. So it's just having a bit of a struggle with that zone, around 2260. But like I said, that's an intraday story, so I'm not too worried about it. But I just wanted to sort of talk through what I was looking at today. But other than that, it was really just VWAP, the 2132, the 2187, the 2289, which we had charted on the daily chart previously. So nice to see these things taking shape. Okay, so here's this disaster of a chart. But let's take a look. So I talked about the cup and handle. Go back and watch like last Thursday's video if you want to see that. But our friend of the channel, Wayne, had sent it along, as did somebody else on Twitter. But this is a really clear breakout from this wedge, right? You see this yellow downtrend and this yellow uptrend, creating this nexus point here. And it just exploded through that and blew past 3 resistance levels, knocked its head on the 4th, and is just situated there for the time being. So to me, the really, really, really important thing about this move is this situates SoFi's price action above this long-term downtrend resistance that was established February 5th of 2021, was reconfirmed on the June 4th and a couple of days after that, and it had been fighting with it as well around the 3rd week of October until today. And today it's working hard to break through that and sort of leave it in the past. So to the degree to which it does sort of leave it in the past, we'll kind of clean up things accordingly. I'm going to clean up a bunch of these other things. Obviously, if we fall down again, I'll go ahead and put some of these back in and sort of rejigger them based on what's happening for the time being. I'll leave the $19 level and up for now, just for funsies. But I also don't think that really this white channel or near channel is also playing much of a role. This was the bounce zone that I said really critical that we don't fall below that. So that held up really well to help prove out this whole sort of major move up. So just a phenomenal day. And, I hope that folks had obviously a really good trading day today, really good outcome in their accounts. And just a reminder to, keep your risk to reward in line. And that's a personal thing to every person. But just keep that in mind on these big green days. If it's time to lock in something, if it's time to, exit a position, what have you, or trim or whatever, I'm not a sort of like diamond hands kind of person. So I think whatever makes sense to you based on the goals that you have and the tolerance level that you have and how you see the play taking shape and that sort of thing, I think you should be free to make smart decisions on days such as today. So, it looks like the next, big level here, and this might be a big reason why it kind of jerked off of that 2289. The most obvious thing is it had a huge run, right? So the idea that it could have pressed through the $23 level is a lot to ask of any stock on these run-up days. But there is a lot of run room, as far as I can tell, from about $23 to about $25. There's not a ton that should resist in terms of like supply and demand levels. There was always pretty swift movements through there, or just sort of like grasping at straws throughout those areas and then falling through or running up. And so I would look, to me, the next big move is establishing support over that 2289 level should really unlock a run toward 25. I don't know if it'll immediately do it. I don't know if it'll do a partial run and come down and retest and then, try to run up again. I don't know if it'll just kind of end up range bound between the 2289 and the 2498s. But that to me is the next big thing to look for to the upside. To the downside, several things. This is, like I was saying before, these are the good situations to be in just because there's so many levels down that you should be able, it should be like huge alarm bells going off if it's falling through several support levels and not holding. If you're looking to like cut losses or not cut losses, but hopefully get out of position before it goes from green to red, something like that. But the first obvious one would be support at 2187, support at 2132, and then it would be kind of, does this yellow uptrend line still hold? It's quite a steep uptrend, but it established that on October 8th, so it's nearly a month that it's held this pretty steep uptrend. And it's sort of had obviously some big movements in there, but it has maintained it, which is quite impressive. And then of course the 2058, but I mean, you can see them as well as I can without reading them all out. But this is just to say, to the downside, those are the obvious things that I'm looking for. But really great motion today, and it was just it was an enjoyable day. Let's flip over to the data. Benzinga, why are shares rising? I mean, this doesn't really give a why as far as I can tell. Oh, I should mention it looks like there's gonna be well over 50 million in volume today. What do we have right now? 52, and that's count is still going to be coming in. And that's, if you remember, on Friday we had dwindling volume, which I was talking about. 11.5 on Friday, 15 million the day before that, 17.5 the day before that, 26.7 the day before that. So this is really a nice pump up, and if we're able to maintain the volume, I don't know if we're going to be able to maintain it all the way through to earnings, but this big volume jump is certainly helpful on days like this. But all Benzinga talks about is that volume is up, and it's popular on Wall Street bets for the time being. And then, this was when it was up over 11%. But this is a good reminder, the 52-week high, 28.26. That's still, if we want to test that high, leaves a lot of meat on the bone. I don't know if we will, but there is certainly still some upside. I know folks get kind of worried that there's much further to drop than there is to rise, but to me, it's not as much as it is just paying attention to the levels and to the trend, and see if the trend breaks, then the play is no longer valid. If the trend stays in line, then the play is still valid. So that's the way that I look at it. I know I've said this before, but I think it's worthwhile to keep in mind people buy stocks that are beaten down all the time because they think that it can't go lower, right? Like that was definitely happening here. And then it goes lower. People buy stocks or don't buy stocks all the time because they think they're too high, and then they end up going higher. So, to me, it's more just how are the levels? How's the chart playing out? Are there catalysts that are potentially coming into play that could give some tailwinds? So to me, it's more that than sort of like how far extended it is. To me, how far extended it is more, the further away from any of those zones or trend lines that it is, the more risk you're probably taking on, because the reward won't be as much as if you bought it, if you bought it today, the reward won't be as high as if you bought it at $19, for example, right? So it's kind of an obvious thing to say. Shorts. Let's check out the shorts. So shorts peeling off today, just kind of looking like they don't want anything to do with it, it appears. Days to cover, kind of everything here is just kind of hovering where it has been. Days to cover cost of our utilization, a little over 8% short interest percentage of the free float. So kind of not a ton changing there. But we'll continue to keep an eye on it, of course. Institutional ownership has ticked up a little bit. I think last time we looked at it was at 39%. So, slight increase, but still this is getting to a good percentage place where just the stability of this alone, allowing sort of retail and whatnot to kind of, sort of this institutional holding being the core position, and then retail and whatnot being able to flex around it, could provide some really good positioning for sustaining these runs or seeing, this trajectory continue to play out. But like I said, we'll have to see what happens to the 2289, what happens to the 2187, what happens to this yellow uptrend line. Those to me are the most important things. But if it can leave this long-term weekly downtrend resistance behind, I mean, that could really, really go a long way just in terms of like getting it moving in an obvious trend reversal cycle. So kudos if you caught this one today, or if you've been catching it for, this run up, and hope that it's making some folks happy on the other side of this video. All right, folks. Well, in any case, no matter what you're trading, I wish you the best of luck, and I appreciate you watching. I will see you in the next video.